One company which is pretty close to where we are right now in the heart of Mumbai city, Marathon NextGen. That's where their commercial properties are. So let's chat with Chetan Shah, the CMD at Marathon, and really talk about a couple of issues. Considering, the kind of moves that we've seen on Marathon and the rebound that real estate as a pack, or at least in the stock markets, the way some of these realty majors have been panning out. Mr. Shah, good morning. Such a pleasure to speak with you. Let's start off really first by understanding what really is the reality on ground, because at least in the equity markets, just about everyone seems to be betting on this big real estate revival which is going to take place. But if you speak with anyone who tracks real estate very closely, they're saying that the commercial market is still very down and the prices have, hit a bit of a statutory phase.
You have to understand that the real estate has not been doing well for many years, and real estate stocks have been beaten down. Anytime an investor wants to invest, they try to catch the bottom. Now we are seeing the real estate turnaround happening. The commercial market that you mentioned about Lower Parel area has clearly shown a pickup, and all the inventory that was built up over the years have started reducing, meaning a lot of sales are happening in this area. Similarly, if you see the residential sector, the affordable segment, that is Panvel, Badlapur, Kalyan Dombivali area, that has picked up really well with new Prime Minister Awas Yojana incentive for first-time house buyer. All this thing is reducing the cost. And that's why I think a very wise investor would want to invest in real estate stocks now.
Yeah, but on the ground, Mr. Shah, has the situation changed? I think that's what Aisha and I are trying to understand this morning. The frenzy in real estate is so strong, and within real estate as well, as you run some commercial and residential projects together, do you think that the bias is with the commercial side of the business right now because of the annuity element of the business model, as well as the fact that there is a lot of foreign interest, a lot of foreign investment coming into that segment?
Yeah, you have to understand the return on the investment. What is happening is on real estate, the rental segment is creating a cap value for the asset. Now, as the interest rates lower, earlier it was between 12 and 15%, now the interest rates, if you see, are between 10 and 12%. Every time interest rates go down, the cap value of the asset goes up. So from that perspective, particularly from geographies like US and other places where interest rates are very low, the investment in commercial real estate, particularly rental income yielding real estate, that is very high, and that's where we are seeing most of the flow going to. Now at the ground reality, if you see, the lower value flats or residential properties are selling really well. The demonetization effect, as everybody was saying, could go up to 30% or 40% prices being lowered. That has not really happened. What has impacted is all the resale flats, which are secondary market transactions. But really the new supplies that are coming in residential, that are really selling well. Of course, it's still 2-3 months to go before we see the pre-November sales. But you can see clearly the trend, January, February, March, and now April, the sales are happening at a higher rate. So ground reality is definitely improved in affordable segment. Now when you come to a high value segment like Lower Parel and Baikala, the high value residential decision makers, people who want to buy the flats, are sort of fence sitters. They are trying to evaluate the market trend. So like everybody wanting to catch the bottom of the curve, they are also in that segment, that phase. So now we are seeing more and more inquiries coming into even Lower Parel Baikala residential segment, and that is also improving. We see next 3 to 4 months to bring it to the level of pre-demonetization sales numbers.
Good to hear that. So, Mr. Shah, let's talk about what you exactly are up to at Marathon. Given your exposure to the affordable housing space, tell us what kind of projects are you planning in that space, especially, given the kind of thrust that the government is now giving to, infrastructures, to affordable space right now. What is it that you're planning in terms of individual projects? What is your portfolio of projects on hand like?
At Marathon, we are focusing on Panvel, where a big project NextGen is already going on. After that, we have another project, two projects coming in Dombivli area, which is Next Town and Next World. And we have an ongoing project at Badlapur. So these four projects, what we call affordable segment and what we are branding as NEX, Next Homes, that is what is our focus. Currently at Marathon Group, 50% of our sales value is coming from this segment, and with interest rates going down, secondly, all this Prime Minister's Awas Yojana and other benefit being accrued to affordable segment, this is the segment which has seen the least adverse effect of demonetization, and this is the segment which is the most promising segment for next 2-3 years. So that's where we are focusing our efforts, and on top of that we also have Bhandup slum project. Now as you see, affordable segment is defined as where 50% of the flats are less than the area. For the city it is 30 square meter, for the surrounding area, neighboring city area is about 60 square meter. So in Bhandup also we are trying to come up with a product which will be less than 30 square meter and which will also be an affordable segment. With this affordability being defined as a infrastructure, all affordable real estate projects are now defined as a infrastructure project where 50% or more are affordable segment houses. There the loan available to the developer is at a lesser rate. My calculations state that about 60 to 120 basis point our funding will be cheaper. That will make the houses that much more affordable, and we will be able to sell at a lesser price. So this is how the situation is panning.
Mr. Shah, then let's get in some numbers. On these affordable projects, what are you investing and how much return are you expecting? Purely in terms of internal rate of return, IRR, and also in your commercial projects, what on an average is your return expectation?
On whether it is commercial or residential, when we make investment in a project, we have our internal calculations. The calculation is clearly done on the basis of at least 15% profit on the cost of the project, which gets translated into different IRR depending on the duration of the project. But overall, I would say that the IRR between 24 to 45% is possible in various projects. Commercial projects, if they sell quicker, the IRR is much higher, and residential project in city, the IRR would be lower, but in again affordable segment, the IRR would be higher. So that's how all the new project investments are made at Marathon.
Right. We also understand, Mr. Shah, that you've recently announced a share buyback for nearly 150 crore rupees. And we also understand that you have cash of about 250 crore rupees already on your books. So why the rationale? I mean, what's the reason behind this buyback then?
See, over last 14 years when we took over this company, our management took over the company, this 30th April we are completing 5,000 days. So it is a celebratory mode, and this is when we wanted to pay our shareholders maximum return. Now if you see the 600 crore, 613 crore worth of net worth as of March 16 is what we had accumulated, and out of that about 260 crore was surplus with us. Now those surplus can be distributed, but the rule requires, the SEBI rule requires that you cannot distribute more than 25% of your net worth, which makes us 153 crore as our limit. So to go all the way to the limit, we have announced a buyback of about 150 crore at the price of 275 rupees per share.
I was still trying, Mr. Shah, you've given us a fair amount of insight When you say that, for affordable housing, your overall average IRR will be slightly lower, for commercial it will be slightly higher. On an average, accounting for the return ratios on your books, what would be a good IRR or return on capital employed that you would clock in for FY18?
See, real estate projects are actually spanning over 3 to 5 years. So on a year-to-year basis, it's very difficult to say. On a project-to-project basis, like I gave you an example, 24% to 45% is our IRR on an annual basis. But these are not, numbers that you can clock on quarterly or half-yearly or annual basis. But you need to consider real estate. Whenever you invest in a real estate stock, you have to consider a 3-year cycle. And so if you consider a 3-year moving average, these are the numbers that you can get on an IRR of at least 24% on capital invested. There is not always the full capital gets invested fully into the projects. So there is always some surplus capital which is not deployed into the project, which is our surplus, is emergency cap that is available. So then you have to average out on a company level what is the IRR. So depending on all these ratios, it is very difficult to say what would be the IRR for the next 12 months.
Okay, fair point. But I'm assuming that it would be on an upward trajectory, right, Mr. Shah?
Yes. Every year, if you see the growth of Marathon, we have shown increasing profit year on year. We have given increasing dividend year on year. Last year, we gave lower dividend because we had plans for this big buyback. The buyback is also not 2%, 3% or 5% that most of the companies are offering. We are giving buyback of almost 25% of our reserve and capital, which is 20% of our equity. So almost last 3 years profit is what we are offering into this buyback. And if you see the capital structure of Marathon NextGen, we have 97% capital that is available is a bonus capital. The original capital is only 84 lakhs out of the 28 crore plus capital which is currently there. So 97% of bonus, and there we are now asking for, we are rewarding by offering 25% of our reserves as buyback.
Okay, Mr. Shah, great speaking with you, and good luck for the future quarters ahead, and we're going to be chatting soon with you, I'm sure.